Kia ora, I'm David Chester with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock, with news that markets have reacted to the latest US Fed policy review, which wasn't as dovish enough for them. All eyes have been on the US Federal Reserve, who today unanimously raised rates by 50 basis points as expected to 4.5%, which is a 15-year high. That increase may be less than the 75 basis points in November, but they now say they will keep going and take this policy rate to about 5.1% in 2023, which is higher than previously indicated. They're trying to slow the rate of increase as inflation slows, but not lose sight of the fact that inflation is well embedded in expectations still and well above its target range still. A soft landing would be nice, but inflation is the declared enemy. The 2023 rate changes may be far less regular than what we got in 2022, and mostly of the 25 basis point variety. They're now not only out of their pandemic abnormal zone, they're through the normalisation and out the other side to a new abnormal on the high side. In other news, after a month of steady declines, American mortgage interest rates rose slightly last week, and mortgage applications did too. Perhaps the American housing market has reached a bottom for the year. And Japanese machinery orders rose more in October than September to finally push the year-on-year result to a gain. In Denmark, in a rare bipartisan agreement, the Danish coalition government said it would cut taxes and cut a public holiday from their calendar as part of an attempt to invigorate an economy they say is weighed down by their welfare society. And British inflation eased in November from October, and by a bit more than expected. Overall prices there are still up 10.7% over the year. The US Treasury 10-year yield started today at 3.50%, unchanged from this time yesterday and holding yesterday's big drop. But after the Fed's release, it rose to 3.56%. And Wall Street opened its Wednesday session with the S&P 500 up another 0.6% in trade prior to the Fed. But then it fell sharply, giving up those gains to be now 1% lower. And the price of gold will open today at $1,799 an ounce and down $8 from this time yesterday. And oil prices start today up $1 from this time yesterday at just on $77 a barrel in the US, while the international Brent price is now just under $82 a barrel. And the Kiwi dollar opened today at 64.6 US cents and holding most of yesterday's big gain. But after the Fed, it fell to 64.1 US cents as the US dollar gained ground. Against the Australian dollar, we're soft at 94 Australian cents and down ¼ cent. Against the euro, we're at 60.6 euro cents and back down almost ½ cent. That means our trade-weighted index starts today at 72.4 and down 40 basis points. Get more news affecting the economy from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.